Good morning, hello and welcome to Opening Bell. It's Tuesday. We are a little past 8:30. I'm Surabhi Upadhyaya and here you are with us on Money Control. Now some of you might be wondering how come I'm on Money Control. Well, it is a new start for me as well as we look at bringing you more in-depth insights from financial markets, from the world of business and all the trends that are shaping up your investments. You've seen me for many years on business television, but here we are now with a new digital start. And from now on, you'll be seeing a lot more of me on Money Control. So thank you for being with us, viewers. We are looking at a very interesting juncture in the market. The Nifty has been struggling. We're talking about 3.5-month lows for the index. However, there is a silver lining, a good silver lining on the trade front. India and EU are at the brink of signing a historic deal. Could that be the trigger that the bulls need? Can that trigger some bit of short covering? Well, those are the questions that we'll be asking experts as we go ahead over the next hour and a half. But let's start off with the headlines. Wall Street ends higher ahead of a big earnings week and US Fed rate decision. The Dow jumps over 300 points. The S&P 500 gains 0.5%. Asian markets open mixed as South Korea's Kospi slips on tariff concerns. Meanwhile, the GIFT Nifty signals a positive start for Indian equities. Crude prices edge lower as a US winter storm disrupts production, while ongoing US-Iran tensions add to market uncertainty. Meanwhile, precious metals hit record highs amid elevated global geopolitical risks. Gold tops 5,100 and silver surges nearly 5%, but then the precious metal space sees some profit-taking in early Tuesday trade. After years of a deadlock, India and the European Union are set to complete their historic trade deal. Negotiations for the free trade agreement are to conclude with an announcement expected today. The FTA is expected to include import duty cuts for Indian textiles and footwear, along with concessions on European cars and wine exports to India. Commerce Secretary Rajesh Agrawal says the deal is likely to be signed later this year once the legal scrubbing is complete. Healthy loan growth helps Axis Bank deliver a steady quarter in Q3. Asset quality improves for the bank. Meanwhile, Kotak Mahindra Bank's bottom line growth misses estimates on labour code-related wage costs, and margins also come under some pressure. Meanwhile, strong cement sales bolster UltraTech Cement's profit. Tata Consumer and Asian Paints are in focus as they're set to report earnings today. And we kick off the week with the all-important Money Control Economist poll. The poll expects the government to stick to the fiscal consolidation roadmap. The Money Control poll has polled 20 economists. The majority expect FY27 fiscal deficit to reduce to 4.2% of GDP, with nominal GDP growth rising to double digits next year. Okay, those were the headlines, and now let's get to the current trading setup. And we're looking at a very interesting one, starting first with Asian markets. Actually, a lot of the Asian markets are flashing green. Most of European equities, European and US equities also had a positive close yesterday. And Wall Street has been on a tear, despite all the geopolitical concerns, despite all the talk and the commentary that's been coming in from President Trump. Markets in the US have done well. So over the 3-day weekend that we had here in India, we've actually seen pretty healthy gains on Wall Street. Markets were positive on Friday. Markets were positive last night as well, with the S&P 500, the Dow and the Nasdaq, all of these indices putting on about 0.4 to 0.6%. So now let's look at some of the other factors that are important to consider as we look at the cues for the day. Trump has threatened to raise tariffs on South Korea. He, in fact, says that that is a possibility because South Korea is delaying actually operationalizing the deal. So his latest threat says that the auto and pharma exports coming from South Korea could now be subject to a 25% tariff versus 15% earlier. That has rattled the South Korean market to a small extent today. In the US, it's a very earnings-heavy week. You have Meta, Tesla, Microsoft reporting on Wednesday, Apple reporting on Thursday. So these are the big tech names to watch out for. The Fed meet also gets underway, and we will have the announcement Wednesday night, Thursday morning for us over here. The expectation is that the US Federal Reserve, the central bank, is going to be leaving interest rates unchanged. So that's on the equity front. Now let's talk about bonds. and what's happening in the fixed income space. And here the dollar is making dramatic headlines. The dollar is hitting multi-week lows versus a whole basket of currencies. The dollar index has come down to 97. The interesting tango between the dollar and the yen continue. The dollar actually weakened and the yen strengthened in a dramatic way over Monday's trade. In fact, the dollar is down about 3% in the last two trading sessions versus the yen, and all of this has to do with political concerns in Japan. As the elections are in sharp focus, there will be a snap poll on the 8th of February in Japan, and the current Prime Minister has promised tax cuts, which has made the market very, very jittery about fiscal consolidation in Japan and whether Japan can service its debt, which has led to a big rise in Japanese bond yields. So keep an eye out on some of these developments. Short point, the dollar is low and the dollar index has come to the 97 mark. Now let's come to crude oil, and that's a bit of a negative cue for us here in India, because crude oil prices over the last 2 days actually rallied close to 3%. This is largely because of outages in the US. Some of the refineries are shut or partially shut because of a winter storm and geopolitical concerns in Iran. So Brent oil prices are now sitting at 65. So there's been a bit of a sharp rally. Little profit taking this morning. But anyway, crude is something that we need to watch out for. Precious metals and the roller coaster ride there continues. Gold hit an all-time high above 5,100. These are spot gold prices in Wall Street trading overnight. And then there was some profit taking. So prices this morning have cooled off to 3%. Silver was rallying dramatically, 6-7%. But again, it has succumbed to profit taking. So extreme volatility continues in precious metals. Finally, let's talk about the Indian market construct, and that construct has been extremely weak. We're talking about the lowest levels for the Nifty since the 8th of October 2025. So that's an over 3-month low. The Nifty is actually 5% off its all-time high. That high was hit on the 5th of January, and it has sold off very dramatically from that level. That all-time high was 26,373. The index is now trading below all of its key moving averages. It lost the 200 simple moving average on Friday as well. That's something to keep an eye out on. So technically, we're trading at low levels. Some will say maybe even at oversold levels, which is why we'll get to a technical analyst in just a bit to ask the question, is a technical rebound in the works? Now, the whole problem for the market is incessant FPI selling. Just tracking the numbers on Friday, foreign investors sold off cash market stocks worth over 4,100 crores on Friday. Domestic institutions offset that by buying almost an equal amount, but the market texture remains very weak. FPIs have sold over 33,000 crores so far in January. That's the highest level of monthly FPI selling in nearly a year. Last time we saw so much of FPI selling in 1 month, it was in February last year around the budget time. Anyway, the mid-cap index is down 7% from the peak. The small-cap index is down almost 8% from the peak. The broader market has continued to melt down and wilt away, and we have to see if there's any hint of a recovery. What can trigger these bears to relent a little bit, to unwind some of their short positions? That's the question that we will get to. So these are the big cues of the day. As we get to our technical experts, let's just remind you that we've got a stellar lineup. Technical trading ideas coming up, fundamental ideas with Mayuresh Joshi. Our lead story of the day at 9 a.m. is the Rupee, the currency weakness. The Rupee is almost at 92. So watch out for a view from Shinhan Bank on what next for the currency. At 9:20, our market master of the day is Harsha Upadhyaya of Kotak Mutual Fund. So watch out for that conversation. And at 9:40, we turn full throttle on the economy, get you budget ready with Pranjal Bhandari, who's the chief economist at HSBC. And two very interesting stories coming your way from Moneycontrol. Is there going to be a rejig on duties on silver in this budget? Zoya has an interesting story for us, and we'll get to that at around 10 o'clock. And the Moneycontrol Economist Survey, Ishan Gerao with the findings in just a bit. So let's get started. It's a packed lineup. And to kick things off, we have Jatin Geria, Vice President of Technical Research at Teji Mandi, joining in with the latest. Jatin, thank you so much for joining in. Good to have you with us. Tuesday morning, we're back after a 3-day weekend. How does it look? Do you think the bears will give the bulls a little bit of a breather?
Yeah, good morning to everyone. We believe that today's gap up opening will be exactly at the resistance area that is around 25,200, 25,150 zone. So the technical setup has been on the weaker side. We believe that this gap up opening will be crucial to watch out for, as most of the gap ups have been sold into since the last eight trading sessions. So we believe that this if this gap up holds on, then we can expect some short covering which happened on the Friday last week. So we believe that 25 200, 25 300, these are the strikes where a lot of call writing happened on Friday, and we believe that if this gap up sustains, then we can have a bout of short covering as we have the monthly expiry today as well. So we believe that yes, the gap up opening is possible, and it is hinting towards that. What importantly we have to see is that if it holds on and we see some amount of short covering on the upside, we believe that 25 350 is an immediate hurdle, while on the downside 25,000 is a crucial support level to watch out for.
Okay, so Jatin, what is the sense in terms of a trade today? Does it make sense, I mean, for the braver traders out there to think of taking a long trade on the Nifty right now? Or what indicators and what levels should you watch before going long, if at all?
Yeah, see, on the index, I believe that 25, we would go open gap up. So post that gap up opening, we would wait for, around an half an hour. If I have to give you levels, then around 25 to 20 is the level around which we have the 20-hour moving average. So if the Nifty sustains about 25 to 20, then we can expect a move towards 25 350, where we have the 40 are moving average. So these are the crucial levels that one needs to keep in mind as we approach the opening. And on the downside, yes, possible that we hold on to the opening of today's trading session. So one should keep a stop loss at 25,125. These are the spot levels that I'm repeating for you. 25 to 25 is the level above which I will go long on the Nifty for a target of 25 350 with a stop placed at 25 125.
Okay, 25 to 25, that is a level to watch. Only above those levels is Jatin advising some sort of a long trade. Got that, Jatin? Stay on. We have lots of other questions for you. We want to get some, stock-specific ideas as well. But let me also welcome in Mayuresh Joshi of William O'Neill. He's joining us with a couple of fundamental ideas and cues for trade. Mayuresh, thank you for joining in, and it's great connecting. We've always connected on the television airwaves, but it's great to connect on the digital airwaves as well. Welcome to the show.
Thank you, Surabhi, and glad to see you in your new avatar. So kudos and all the best for you.
Thank you so much, Mayuresh. So, what's your overall sense? We just got some technical levels with, Jatin there. But it's been really, really tough for, market traders, for investors, because we've watched a very dramatically disappointing January. And now we are winding down, heading towards the budget this week. And wow, I mean, down 5% from the peak. It's been crunching, and down 8% if you're looking at the mid cap or the small cap universe. What's your overall sense?
No, absolutely, I think. And I think it has been evidenced by a lot of global events as we speak. So geopolitics has been a major detrimental factor for Indian markets. What probably happens in terms of Iran, what probably happens in terms of Russia, Ukraine, that has again sprung up. And that is creating that element of volatility. Not less to forget, I think what Trump probably has statements with Greenland as well. The second element in terms of tariffs on EU countries, revoking it, taking it back, extra duties on Korea, as he's probably is announcing as we speak. I think all that is creating to volatility in terms of how the globe and the economic progress in terms of overall GDP numbers will play out for a lot of countries across the globe. And then you come to the macro and the micro aspect of India. I think earnings are going to be extremely critical. What you probably saw and witnessed in Q2 was pretty reasonable. The earnings season has been a mixed bag so far, but I think the hope here is to be that Q4 onwards, it should be far more stable in terms of the Indian context. Inflation is probably looking at a lot more under control in the Indian context. as we head into the budget, the expectation largely is stable and a balanced budget, both in terms of both the twin deficits that you're talking about, the capital outlay, as well as the overall market borrowing number. I think all that should be properly stable, which makes us believe that if earnings start stabilizing and improving in the Indian context with stable macros, India might stand out. But till that point of time, I think with global events, geopolitics, inflationary factors, global GDP, the FI outflow has obviously been a detrimental factor. DIs have been trying to support the market, but the volatility might continue, in my opinion. So I think it's going to be a sector and a stock-specific approach, at least for the next quarter.
Okay, all right. So it has to be a careful approach, a very, very well thought out stock specific approach, which is why we're going to get to stocks, gentlemen. So let me quickly run through today's stocks and news list, and there are lots of earnings on that list. And then we're going to come back to our experts to get a view on some of the more important ones. So here we go, stocks and news today and earnings in focus today. Let's start off with Axis Bank. Axis Bank has actually posted a pretty healthy quarter. The profit is up about 3%, no complaints over there. The net interest income has grown 5%, which is pretty much in line with earnings. And the good news is that the asset quality has actually improved. If you're looking at it on a quarter-on-quarter trend, then the gross NPA levels have come to about 1.4% versus 1.46%. So no issues with the Axis numbers. The provisioning, by the way, has come down for Axis as well. Provisions are down almost 33% quarter on quarter. The only issue is that the margin, net interest margin, has compressed by about 8-9 basis points, but that was widely expected, so it's not really much of a shocker. So Axis Bank seems to be a good set of numbers. Let's move to Kotak Mahindra Bank. Now here there are some concerns. The profit number for Kotak Mahindra Bank has missed estimates, and you can blame this on the new wage code, because of which the employee cost element has gone up, and that has eaten into the profit line. So the profit is up only 4%, which is lower than most of the street estimates. The net interest income is up 5%, which is more or less in line. The margins are flattish at about 4.5%. The good news is on the gross NPA front, because the gross NPA has come down from 1.39% to 1.3% at the end of the quarter. So that is pretty much what we are looking at for Kotak Mahindra Bank. Let's now quickly move on and talk about IndusInd Bank, since we're completing all the banks, and this bank is in sharp focus as it looks to kind of rebuild operations under new leadership. Mr. Rajiv Anand, of course, heading the bank right now. So we have seen a very significant drop in net profit, a 91% decline if you're looking at it from a year-on-year perspective, because of a couple of extraordinary items. However, if you see this profit on a quarter-on-quarter basis, then that's actually is good news, because the bank was in a loss in the previous quarter, and now at least it's swung into a profit of 128 crores. So that's the highlight to keep in mind. The net interest income has fallen. It's down about 13% year on year. The margin, however, has shown some improvement. Sequentially, the net interest margin is up about 20 basis points. And gross NPAs, they continue to show a mild declining trend. So the asset quality pain seems to be out of the way. And it seems that the rebuild program seems to be in progress at IndusInd Bank. Gross NPA is now at 3.56% versus 3.6%. So that's a 4 basis points improvement. So IndusInd Bank not looking bad either. Let's talk about UltraTech Cement. Good numbers here coming in. Profit is up almost 27%. There is a one-time exceptional expense of 88 crores in the quarterly numbers as well that we need to keep in mind. The revenue is up about 23%. EBITDA has shown very strong performance, a growth of 35%, and the margin has expanded a very, very handsome 166 basis points. So UltraTech has done very well on the operational front, on the EBITDA margin, which is now touching almost 18%. So good numbers coming in from UltraTech Cement as well. Let's move on. JSW Energy net profit zooming almost 2.5 times. I mean, that's a year-on-year comparison. The profit has now touched over 400 crores. Big bump up coming in. The revenue has also surged. So it's not just a one-off profit increase that we're talking about. The revenue itself is looking very healthy with a gain of 67%. That's a year-on-year improvement. And the revenue line is now coming to almost 4,100 crores for JSW Energy. EBITDA has done exceedingly well as well, up almost 2 times at over 2,000 crores. The margin has expanded for the company to nearly 49.7%. So good numbers from JSW Energy. Let's talk about Sterlite Technologies. The loss has narrowed to about 17 crores in the third quarter. EBITDA for Sterlite Technologies is up about 16%. The margin has shown some contraction. The margin is actually down 80 basis points year on year. Godrej Consumer, another good set of numbers. It has delivered more or less in line with expectations. The profit is flat at just under 500 crores, but the revenue is up. Volumes are looking pretty decent. Revenue is up about 9%. The EBITDA is up about 16.4%, and the margin expansion is what the market will focus on. It's looking quite healthy. Year-on-year margin expansion of 140 basis points. Quickly rounding up the numbers, DCB Bank profit up 22%. The net interest income has grown 15%. The gross NPA is at 2.72 versus 2.9. So asset quality for DCB Bank has improved quarter on quarter. That's something to take note of. Lots of earnings over there. Moving on to some numbers and some news announcements beyond earnings as well. Hindustan Copper is going to be in focus. It's a bidder for the Bhagwari Khikori copper block in Madhya Pradesh. PTC India is taking full control of the company. The three promoters are stepping back. The three promoters, namely PFC, Power Grid and NHPC. So that's a corporate development to keep in mind. And then a Moneycontrol exclusive, which is now official. PVR INOX has exited the gourmet popcorn brand 47,000 BC, and they have sold this off to Marico for a very tidy sum of around 226 crores, almost 227 crores. This has been sold to Marico. This is a brand that PVR had acquired. It had 70% stake. And this stake was worth just 5 crores back in 2015. And imagine now they've sold it to Marico for over 200 crores. It's a very tidy sale. So watch out for PVR INOX. It should be in focus on the positive side because of that. Marico, of course, it's very interesting because they're getting into the snacking space. So let's see how the market reacts to this. Ajay Bijli of PVR INOX says that the transaction marks a natural culmination of our strategic role. It allows PVR INOX to monetize a non-core asset. So the popcorns will no longer belong to PVR INOX. They will now belong to Marico, those gourmet caramel popcorns, in case you have them next time you watch a movie in PVR INOX. So this is what we have in terms of our stock list. Okay, quickly going back to our technical and our fundamental expert. Mayuresh, I want to start with the banks. We saw lots of them report. Axis, Kotak and IndusInd, the slight improvement that we're seeing every quarter. Give us your first cut headline take on the big banking numbers over the weekend.
So I think Axis Bank was a decent number, Surabhi. I think when you probably look at the NII growth, it was decent. The NIM compression was something that was expected because it is still a transitionary phase for most banks. What is probably happening in terms of the advances and the deposit adjustments and the ALM adjustments will take some element of toll, but I think it should largely stabilize as we go into Q4. The biggest part is that the CASA deterioration for most banks is largely behind us as we speak. And you are seeing sequential improvement even in asset quality pressures, which is a big plus. With strong capital adequacy, my own take is there should be stronger growth. But banks which will adapt to better risk practices in terms of better underwriting, in terms of Q4, Q1 numbers, I think they will fare a tad bit more better than the others. So I think Axis probably out of the larger ones stood out a tad bit. For IndusInd, again, I think the cleaning up process still continues. And in my own sense, I think Q4 is where I think the entire cleanup will happen as the financial year ends. And this should probably begin on a very clean slate as we head into Q1. Within the mid-cap banks, DCB Bank has a very decent number as reported. Asset quality pressures are coming off. The base is obviously lower than the larger banks, but still, I think the NII growth, the expectations in terms of advances still growing at a good pace with asset quality pressures coming off might actually lead to sequential improvement. So I think Axis and DCB, in my opinion, stood out a tad better out of banks.
Okay. Jatin, okay, that's on the fundamental side. So we've got the fundamental analysis on the banks. Let's see technically if there's a trade in either the Bank Nifty or any of these banking stocks. Jatin, and do give us your sense on the bigger names like Kotak, where the results are slightly disappointing, and Axis, where the numbers look very, very good. So your bank trades for the day, or even if they're positional for the next 2-3 days.
Yeah, see, I believe that some of these heavyweight bank Nifty names came under severe selling pressure on Friday. So we believe that yes, despite all this drama that is going on, or the sharp selling pressure that is going on, we believe that there is some scope for Axis Bank to show some recovery if we have a positive day of trade today. So I believe that Axis Bank could be one stock which where we can take a trade. In terms of levels, we believe that 1240 is a crucial support, and on the upside we believe that there could be a rise towards 1300. So Axis Bank among the names looks positive from a trade perspective.
Okay, and any trades on the bank Nifty itself,
Yeah,
Jatin?
see Bank Nifty again. Yeah, see Bank Nifty again. We believe that it's approaching the 58,000 level where we have a rising support trend line and also the 20-week moving average. So 58,000 is a very strong support for the Bank Nifty. We believe that 58,000 is likely to hold on. However, it's around 470 points from the previous closing. We still believe that dips towards these levels of 58,000 should be used as a buying opportunity. We believe that Bank Nifty has been the clear-cut outperformer in this phase of correction, and we believe that 58,000, 58,100 is the level around which we can expect a turnaround in the case of Bank Nifty. So I'm not going aggressively short on the Bank Nifty. Bank Nifty is clearly the outperformer. In fact, I'll be looking at buying opportunities around 58,100 to 58,000 levels.
Okay. Got that. Mayuresh, very quickly to some of the other stocks that are in focus. I'm very curious on what you thought of the PVR INOX Marico deal. Give us your sense if you like either of the stocks, because PVR INOX, otherwise the struggle simply continues. I mean, a longer term chart will tell us that. Though now, I mean, one could argue that people seem to be going back to the theatres. I think Border 2, I'm not sure if you saw it or not. I did. But the collections, overall collections look pretty decent, the box office collections for the 3-day weekend. But I don't know if that changes anything for the stock.
No, so yeah, absolutely. You hit the nail on the head. I think it's all about content, right? I think the last two movies have been a success. Durandar was a runaway hit. Border 2, the collections have been very strong. No, I didn't see it. I was at a wedding in Pune over the weekend, but I will go and see it. So if the trend continues, I think that is where I think the respite will come out again for PVR Inox. But largely, I think it has been struggling. You're absolutely right. And with the popcorn thing, I think it does make a sort of an impact. But I think for you and me, Surabhi, I think the prices remain same when we consume the same in the theaters. So.
Okay. So, what about Marico? I mean, from a deal perspective, the spending over 200 crores on this, not a huge amount for Marico. We also had Godrej's numbers. So, anything in the FMCG basket that you'd look to buy now?
So it looks very defensive. So at MarketSmith India, I think the rating rankings for this sector are actually coming up very strongly. Godrej Consumer, again, a decent set of numbers. Inventory rationalization will probably just take a little bit of a hit on FMCG companies in Q3. But as that rationalization happens and as we head into Q4, I think it will be more structural in terms of demand, in terms of volumes, in terms of organized players gaining market share. And therefore, I think with input costs remaining far more stable as we speak, expectations of value plus volume growth will be a given. Marico, again, I think from a market cap perspective, I think it's a very small and a minuscule deal as is concerned. But they are aggressively getting into the branded food segment as we speak and are diversifying. So I think they need to probably create a lot of value around that branded food stroke beverages segment that they are probably trying to create at this juncture. And these are small steps in that direction. But overall, I think FMCG as a pack probably looks both defensive as well as expectations of a reasonable amount of earnings growth expected to start from Q4.
Okay. By the way, we have crossed 9 a.m. So the first of the pre-open rates have started kicking in. Of course, the rates will have to settle. Right now, it's quite something. I'm seeing a 10% up move on Axis Bank. Now, unlikely that it plays out that way. We'll see. But some of these rates are coming in. So let's get them on the screen. The Nifty in the pre-open is up about 25 odd points. That's what we have. What else? Let's see how Kotak is reacting. Kotak is down about 1.5%. And IndusInd Bank will come up on our screens as well. So that's the Nifty. Not too much of a change over there. Let's pull up some of these other stocks that we are just discussing. Marico, we'll get PVR Inox up for you as well. And let's see what IndusInd Bank is doing. That's the one that also came out with the numbers over the weekend. IndusInd is down about 1%. That's Kotak for you. Kotak is down about 1.5%. We'll just get that changed on the hot board. It's 1.5% decline coming through. And IndusInd Bank as well is down about 1% at this point in time. Okay, Jatin, before we let you go, so let's talk about your trades. We've discussed Nifty, Bank Nifty, but the top 2-3 trades for you, it could be index, it could be stock. How are you approaching the market today?
Yeah, see, we'll be taking a stock-specific approach. We have two trading ideas for today. The first one we have is ONGC. So ONGC, after a correction towards its 20-day average, is showing signs of a recovery. We believe that on the upside, it could travel towards 258. So the current dip should be considered as a buying opportunity. On the downside, 238 is a crucial level or a crucial support. So ONGC is our first trading idea for today. Apart from that, the IT names are still holding on despite the overall broader market correction. So we believe that Tech Mahindra is one stock that we like technically. Since last 4 trading sessions, it has been consolidating. We believe that this consolidation is complete, and on the upside, the next leg of the up move can resume. So Tech Mahindra is our buy. We should place a stop loss at 1675 on the downside and expect levels of 1775 from a short-term perspective. So ONGC and Tech Mahindra will be our two top trading recommendations.
ONGC and Tech Mahindra. Got that, Jatin. Very, very helpful. Thank you very much for joining us during the pre-open session and helping us get set for trade today. Thanks for joining in. You have a good day. Mayuresh, before we let you go to kick off your day, give us some ideas. I know it's tough to talk about ideas in this market, especially the way mid-caps and small caps have been completely melting down. But for someone who has the patience and the fire in the belly, the risk appetite to go and buy, anything new that came across your radar?
Nothing new within the space itself, Surabhi, but I think if you are looking at a risk-reward perspective and leadership stocks, as we always do at MarketSmith India, I think UltraTech posted a very strong set of numbers over the weekend. Volume growth was up 15% at almost 38, 39 million tons. Realizations were down very, very modestly. The EBITDA per ton at 1,050 was very, very strong. They're expecting Q4 to shape up very well in terms of EBITDA. Capacity expansion is on track. So I think if you're probably looking at the infra and the growth story as far as India is concerned, cement stroke infra will become a very important and an integral part. And a leadership stock like UltraTech, which is forming a very nice base as we see it at MarketSmith India, might actually continue doing well over a medium to longer period of time. FMCG, as I said, within defensives, is something that can probably do well structurally as consumption probably grows. So consumption as a theme is something that will also evolve in the Indian context. And therefore, I think consumer staples, specifically FMCG companies, might actually continue doing well going forward. I think we spoke about Marico, but even something like a Nestle India as an example, the base structure is forming very well as we speak. Most of its subsegments, divisions are expected to perform strongly. Input cost look reasonable at this point of time. Q2 numbers were an outlier for Nestle India compared to the entire pack. And therefore, I think cement and FMCG as a pack might continue doing well, Surabhi, over the next 4 to 6 quarters, in my opinion.
Okay, all right, plenty of ideas there. Thank you, Mayuresh, very, very much for that. Very helpful advice. You have a great trading session today. And of course, we'll connect again soon. Thank you for joining.
Yeah.
Thank you.
Thank you so much.
Okay. Well, on that note, let's just take our eye back to the market. So the pre-open continues to move along. Don't have too many big rates to report over here. It's very, very flat trends on the equity side of things. Some of the leading stocks, Axis Bank is now settled. It's not a 10% pop like I was saying. It's now settled 2.5%. Numbers have been pretty decent and the market likes that. Some of the other gainers include Hindalco and JSW Steel. So watch out for the metals pack. Metals is the only thing in the market that has worked so far in January. Metals and PSU banks. And that trend seems to be continuing today, this Tuesday morning as well. The other big story to focus on is, of course, what is happening to the rupee. Remember on Friday, the rupee was almost on a one-way decline. It has fallen over 1% for the last week, and it almost hit the 92 mark. Now, the hope is that the dollar is so weak internationally, with the dollar index around 97, that it should give maybe some respite to the rupee. But for us, the bigger problem is the FPI outflows that have been relentless in the month of January. So where does the rupee go from here, and what are the factors at play? Let's welcome in our next guest. I think in the next couple of minutes, we'll have our next guest joining in, Kunal Sodhani, who's Head of Treasury, Global Trading and Forex at Shinhan Bank. We'll ask, Kunal what he thinks. I'm just looking at the Forex rates as we speak. Let's pull up the rupee if we can. 91.83 is what we have. The closing on Friday was as low as 91.94, which is what I'm saying, was practically at the doorsteps of 92. So we need to see if there can be some pullback today or not. Internationally, the dollar is on the back foot. The dollar, in fact, fell against several European currencies as well. The dollar on over the 3-day weekend that we had was down versus the euro. It was down versus the British pound as well. And the overall dollar index itself has come down to 97. The drop in the dollar, by the way, has been pretty dramatic in the last couple of trading sessions. It's fallen off quite a bit, but that hasn't exactly helped the Indian currency. Let's see if we can connect with Kunal. Do we have Kunal with us? Can you hear me, Kunal?
Oh, yes, I can hear you. Can you hear me clearly?
Yes, Kunal. Good morning. Thank you so much for joining us.
Indeed, my pleasure, Surabhi. I've always been listening to your news feeds, and it's a pleasure connecting with you.
Thank you so much. We would love to get more perspective. Our viewers really want to be a little more clued in on what exactly is going on in the FX space, because it's been a one-way drop. We were almost at 92 on Friday. How do you rate the cues this morning? Because overall the dollar is under pressure, but we still have our own set of problems here in India on the currency front. Kunal, so, how do you see things today? On my screen right now, I'm seeing 91.84. Do you expect any central bank intervention, or do you think it's just a matter of time before 92 is breached? Okay, I think we'll have to connect. We'll ask Kunal to log in once again and connect again. I think that line has just dropped. But that is one big talking point. Now, remember what is also playing out in the currency markets in a very interesting way is what is happening in Japan. Maybe we can put up some of those graphics, and that's what I was referring to earlier. In Japan, the surge in bond yields is having, tremendous pressures, because there is this big worry in Japan whether with these rising bond yields, can the country continue to service its debt obligations. We saw a lot of pressure on the yen coming through as well. However, on Sunday, the Japanese Prime Minister Sanae Takaichi said that any excessive speculation in the market will be dealt with in a very clear and precise manner, and that gave traders a feeling of maybe coordinated action from the US side and from the Japanese side, though we've not had coordinated central bank action in years and decades now. But because the moves are getting so excessive in the dollar yen, we saw that warning come out by several officials in Japan, including the Prime Minister herself. And after that, the dollar fell and we saw the yen rise quite dramatically as well. So that's what's playing out in the global markets. In any case, there is the so-called sell America trade that has been underway. And we've seen US assets, not US equities so much, but a move away from US bonds and treasuries, and the dollar has been, a recipient of some fury in that sense as well, and that's one reason why the dollar has fallen quite a bit. Let's see if Kunal is back. Kunal, hi, can you hear me? Okay, we don't seem to have Kunal just away. We'll try and get him back in a bit. Okay, so on that note, let's get back to the market. By the way, we also have our big view of the day, which is the big call that's coming in on the Indian market. And we'll talk about that in just a bit as well. That's our quote of the morning, and we'll get to it as we go along. For the time being, what we have on the screen are the pre-opening rates. and it's very quiet. M&M, by the way, is down 3%, and no prizes for guessing this one. The fear that cheaper EU cars are coming. Remember, today is a big day because we'll have that announcement come in terms of the trade negotiations having concluded between EU and India. And one of the things that's likely to become cheap is European automobiles, and that seems to be putting a little bit of a spanner in the works for Mahindra and Mahindra. Shares are down about 3% at this point in time, so watch for this stock very, very carefully. It is that fear that is triggering some profit taking this morning. And anyway, M&M has been one of the best performing stocks in the last 1 year in the market. And it seems that this EU FTA could trigger a bout of profit booking. Kotak Mahindra Bank is down about 2%. Wipro is down about 1.5%. These are the weak names. But on the flip side, it's still metals all the way, the chase for hard assets. So Hindalco up about 4%. That's the leader of the pack. And then you have some of the banking names like Axis Bank looking quite good as well. We're counting down, last 4-5 seconds left for trade to kick off, and then we'll look at, of course, some of the gainers and the winners and losers as well. So if we talk about how this is playing out, on the Nifty, the start is almost 40 points higher. Those are the first trades that are coming through. Nifty is up 50 to 55 points at this juncture, 60 points now. The Bank Nifty is slightly weak. The Bank Nifty is not really playing ball. It's very, very flat at this juncture. The mid-cap index is trying to show a little bit of a recovery. Mid-cap index is up 0.3%. So these are some of the initial rates that we have. Axis Bank 3.5% up. Adani Enterprises. Remember, the Adani group of stocks had a severe drubbing on Friday on some concerns about the SEC perhaps looking to issue summons on top leadership in the Adani group. So that had led to a big decline on those stocks. However, they seem to be recovering at least this morning. Adani Ports also 2.5% higher. Adani Enterprises up about 2.5% as well. That's the Nifty for you, gain of 70 points. So not a bad start. Though we don't have a very big gap up as some might have hoped for. That's not what's playing out. The leadership stock now is Axis Bank. Improvement in asset quality, margins along expected lines. And the market is really liking that. So almost 3.5-4% up on Axis Bank. UltraTech Cement is the other one, 2.6% up. There's Adani Enterprises, 2.5% higher. Hindalco, Adani Ports, JSW Steel. These are the names which are on the upside. 1.5% up on SBI Life as well. Grasim is up 1.2%. Coal India is up about 1.2% higher. So these are some of the big names on the way up. On the way down, Kotak Mahindra Bank is the casualty of the morning. Remember, we talk about profits missing the mark because of the added pressure from the labor code. So the wage cost has gone up. That's one of the key reasons. And the net interest income, the net interest margin picture also not exactly enthusing investors. So down in a big way on Kotak, down about 4.5% at this juncture. By the way, M&M is also sliding, so keep it on the radar. M&M is down almost 5% because of the FTA impact, India-EU FTA, which is all set to cut duties on European cars, so they could come in cheaper in terms of imports coming into the country, and that is weighing on Mahindra and Mahindra. The other losers of the day include Wipro, Cipla and Eternal. By the way, the market's already turned negative, so the initial gap up has been immediately sold into. This is looking like a pretty tricky morning. 22 points lower on the Nifty. Mid-cap index also slightly lower now, so bit of a shaky start as we start things off. This is what we have. Let's see if we can go back to that story on the currency. Do we have Kunal with us? Kunal, hi, can you hear me?
Yes, I can hear you. I'm really sorry for the technical glitch from our side.
Yeah, that's okay. So yeah, I was just trying to understand how you're looking at things now, because overall the dollar has been weak. But then, we have our own issues with FPI sales, etc. So let's talk about today. What do you think of this small pullback that we've seen on the currency?
So I believe the story of FPI obviously is there. We have seen outflows to the tune of $3.7 billion already in January. But the main story is not tariffs. According to me, the main story is more derived from the Japanese bond yields, where the rising bond yields kick off. They in the EM space, money is taken off and the outflows are seen. Similarly, from India, it happened the same way because the yields are rising and it was not attractive. So people are pulling back money back to Japan. So that was one of the major reasons for me. Yes, smaller reasons could be tariffs, but I think they were ongoing, obviously. But there are some positives coming back to today. Obviously, talking about the India-EU FTA trade, where we have around $105 billion of exports to the EU, particularly with respect to textiles and jewelry. So there, I think some soothing of effect may be seen on the rupee. While on the contrary, where EU also exports to us to a tune of $61 million, mainly automobiles, chemicals, plastics, where again, this is a win-win situation for both of us. So that's a positive side. Second positive was one of the statements which came off in the Davos, where the US Treasury Secretary Scott Bessent was of the opinion that maybe in the mid of this year there would be 25% import punitive cuts seen from the tariffs from the India perspective. So these two things have been positive, from the rupee perspective. Even in Asia, we are the worst currency, and even if we talk about the emerging market, we are again the worst currency pair. But obviously, I believe there is enough ammunition which RBI has got, with the FX reserve standing at around $701 billion, just short of the near high seen in September 2024 of $705 billion. So enough ammunition. Only risk, I believe, personally, is the RBI's forward book, where the RBI's forward book stands around $66 billion, and thus intervening too much can be tricky situation for them, building more short positions, which possibly is holding them not to intervene that sharply.
Kunal, stay on. We have Harsha Upadhyaya, our market maker of the day, joining in. Harsha, of course, is from Kotak Mutual Fund. Harsha, pleasure to be connecting on the digital airwaves. So far, we've connected on the television airwaves, but it's all about going digital now, isn't it? Welcome to the show.
Good morning, Surabhi. Yes, that's right. We have been talking on other media, but yes, this is the first time I've been on this show.
Thanks so much, Harsha, for being with us here. We just had Kunal Sodhani of Shinhan Bank. We were just taking a comment on the rupee because, and it's all, the problem with the currency is tied in with the problem in the equity market, right? I mean, what do you do? What do you do when you have 33,000? I was looking at the numbers. In January alone, almost 33,600 crores worth of selling hitting you in the face, even as domestic mutual funds are trying to offset that. So this whole flow situation is something that doesn't seem to be stabilizing. I mean, what are your thoughts and what should we brace ourselves for?
True, Surabhi. I think if you look at the main fundamental reason for that is on a relative basis, we still continue to be one of the more expensive markets within the emerging markets. And also, if you look at the earnings trajectory for the next 12 months, it's not that there is going to be a significant revival. Yes, there is going to be some moderate improvement over the next 12 months, but it's not that we are going to be superlative in terms of the earnings trajectory. So the question is, if there are other emerging markets which are available at a slightly better valuation with slightly better earnings growth, then probably that would be the market that foreign institutional investors would look at. And on top of that, we have also had the whole tariff issue, which has become a problem for long-term investors to take any calls at this point of time. So I think if some of these issues resolve themselves, then I think we can expect foreign institutional flows to resume again. In fact, calendar year 25 was one of the worst relative performance that India has seen against emerging markets for many decades. So to that extent, yes, the underperformance that we saw has kind of adjusted the valuations. However, the earnings trajectory is still not very strong, and that's where it stands.
Yeah, we'll talk more about this in detail. Harsha, just allow me to take a final comment on the currency with Kunal. So let's just figure out what levels we should keep in mind. Kunal, so is a breach of 92 just a matter of time? And do you expect any intervention from the central bank?
So I think the positive side, obviously, I mean, there can be some intervention. No one can actually time that intervention. But yes, first of all, 92 big figure acts as a psychological support, or maybe resistance, my bad. But I believe, yes, it can be a matter of time. We have been slowly and steadily depreciating. Overall, if we talk about a 25-year span also, Rupee has been into a depreciative phase of a CAGR of around 4.25%. But now, because the interest differentials have narrowed down, obviously the depreciation may not be that much. But last year we have seen around 5% of depreciation. So for me, if I put into numbers or levels, 91.20 may act as an important support. The big figure psychological 92 will act as a resistance. Also for forwards, where the premiums are also sticking lower, it's around 2.63% annualized. So it is not enticing exporters or maybe carry traders to come in. So that is also another factor, which can take off 92 also within maybe a matter of days.
Okay, all right. We'll keep those levels in mind, Kunal. Thanks very much, and we'll rely on you to bring us up to speed if there are any sharp moves in the market or any specific regulatory announcements come through. Thank you so much for joining, and you have a great day, and good to have you with us on the show today. Thank you so much, Harsha. Now coming back to the central point. So yes, I mean, flows is something which is purely not in our control, but then the earnings trajectory, that's what you were talking about, right? And that is where things have been stuck for over, I think, year and a half now. Let's start by understanding what you make of the current earnings season. Do you see a ray of light anywhere?
Yes, we do expect a slight bit of improvement in the third quarter results that are coming by now. However, as I said, it's not going to be anything significant that will change the course of market movement, in our opinion. First off, Nifty earnings growth was just about the mid-single digits. From those levels, probably we will inch up towards high single digits this quarter. And sequentially from here on, we should continue to see a little bit of further improvement. For financial year 27 as a whole, we are expecting about 14 to 15% earnings growth. So it's not a market where you're going to see superlative earnings growth, but definitely you're going to come back to a long-term earnings trajectory. So to that extent, when you look at valuations from domestic historical range of valuations that we have seen, we are more or less around historical average levels on a 10-year basis for large caps at least. So to that extent, given a slight bit of improvement over the next 12 months and average valuations, I think the volatilities should reduce. However, as we spoke earlier, from a foreign institutional investor perspective, things are still very different because India still continues to trade at a premium. And also they have slightly better options in terms of other destinations giving better expected earnings.
So that means that we are stuck in a logjam. I mean, hearing you, Harsha, it seems that more time correction for this market then. Because this even a 15% earnings growth may not be attractive enough for the foreigners, as you're saying, though it is perhaps in line with our longer term trends.
So 15% in INR terms, I don't know what it translates into in terms of USD returns. So to that extent, yes, I think stability in rupee dollar rate is something that foreign investors will look for. And once they get comfort on foreign currency, and if there is an expected earnings growth, then those calls will be easier. Coming to your question, yes, I think for some more time, probably we are going to be in a range-bound market with more of stock-specific actions rather than entire index doing something. In fact, that's been the story for 2025 as well. If you look at Nifty index, probably it closed flattish for the year. However, the median fall within Nifty itself was more than 8%. And if you look across mid caps or small caps, it was even higher, 16% and more than 20%, etc. So clearly, it's been a stock pickers market, and it will remain so for next couple of quarters, in our opinion.
Okay. So then, what's the advice in terms of, and I know this is going to be bottom up largely, but do you see certain sectors or certain themes where the earnings profile perhaps starts recovering to double digits, ahead of the others? So purely from an earnings recovery perspective, which are the top 2-3 sectors that you'll watch out for over the next few quarters?
In fact, Surabhi, actually next year, that is financial year 27, you're going to see many sectors participating in terms of earnings growth. It's not that a sector is going to grow at 35% and something else is at a negative 20%, etc. Broadly, most of the sectors are growing in those double-digit levels, early double-digit to, let's say, high teens. So to that extent, I think it's going to be a little more broad-based than what we have seen in terms of the earnings trajectory for 2025. Having said that, there are a couple of sectors which will continue to provide higher than market average earnings growth in our opinion. Banking and financial services definitely will be one of those themes where we see higher earnings growth. In fact, if you look at the past 12 months, NBFCs and PSU banks have definitely outperformed the market in terms of earnings growth. However, the private sector has not participated, but going into next year, we do expect even private sector banks and lenders to actually participate in that. We do expect autos to continue delivering high teens kind of earnings growth even next year. Across many segments, we are seeing very, very strong volume growth, and margin should also hold up given the operating leverage. We have seen a kind of a revival in terms of demand for cement, largely led by government projects in this quarter, and that should continue over the next few quarters as well. And along with that, we have had a serious consolidation in the industry where pricing power seems to have come back to the industry. So again, that is another segment which will continue to grow at healthy earnings growth rate. So these are some domestic businesses which will kind of grow at pace higher than average earnings growth of about 14 to 15% in our opinion.
Okay. So banks perhaps, BFSI, banks and especially private sector names, they could play catch up, and that they could be a segment to watch. On IT, Harsha, what's your sense? Because there is a section of the market that feels that IT might have been down in the dumps, but eventually as this AI adoption improves, then there could be a bit of a revival in the fortunes of even the larger IT services companies. What's your current stance on the sector?
Currently, we continue to be underweight on the sector as earnings growth is clearly behind average market earnings growth, and also very, very tepid, I would say, for the last 12 months. And even when you look at next 12 months or 18 months, it doesn't seem like there is going to be a significant change in those growth rates. Yes, AI adoption could be a game changer for at least some of the companies, but it remains to be seen how some of those companies kind of take this initiative and start looking at those opportunities. It's too early to say that entire sector is going to benefit or entire sector is going to be at the will see the headwinds of AI, etc. I think it's going to be more of stock specific opportunities even in IT, just like what we have seen in the overall market. But nevertheless, from a sectoral perspective, clearly this is a sector which will lag in terms of earnings growth over the next few quarters. And to that extent, I really don't see a reason why one needs to be overweight on this segment at this point of time.
And Harsha, one more sector that has completely stolen the thunder is really metals, right? That seems to be the only thing that's working in the market along with PSU banks, whether it's precious metals, whether it's base metals, whether it's ferrous. And people are seen hunting around to either play the metals directly through index funds or ETFs, or look at the equity derivatives. You know, so for an Hindustan Zinc and a Hindustan Copper. And we've seen what these stocks do off and on. I mean, they have these massive, sharp bursts here and there. But do you see this whole metals move as this move towards hard assets, as some call it? Is this more of a cyclical or structural play here at this juncture? Or do you think these are just trading moves and you wouldn't kind of back them? What's your sense? Which side of that debate are you on?
Surabhi, if you look at precious metals, clearly, I think it seems very, very structural. There is dollar debasement fear, along with that higher industrial demand, central banks buying into some of these metals, and various other geopolitical issues are actually leading to such a strong move in precious metals, which we think will continue. Of course, it's been a parabolic move in the last few months, given that any asset class which moves like that, you have to be very careful. There could be very, very sharp corrections, even without any trigger in that sense. However, from a slightly medium to long-term perspective, we still believe that precious metal story will continue to remain strong. As far as other industrial commodities are concerned, of course, there has been a significant strength that we have seen in terms of metal prices globally in the last few months. This is due to a fear on dollar weakening, and also the fact that Fed is likely to cut interest rates and many other issues. From a demand perspective, we are not really seeing any great improvement in demand. The global growth is still going to be more or less similar to 2025 levels, even in 2026. So clearly, demand side, we have not seen significant changes. Of course, the prices have moved up. So to that extent, some of the Indian companies will also benefit. In terms of supply, I think more or less it's a balanced market, at least in the domestic space, as far as most metals are concerned. So I think over the next few quarters, this segment may continue to outperform. However, unlike precious metals, on industrial metals, you have to be a little more agile and take more tactical calls, in our opinion.
So Harsha, as we are winding up this conversation, what is the reality check or the advice that you'd like to leave viewers with? Investors have been patient, right? Even in mutual funds, I think, and as I look around at all the cues, all the uncertainty, the only solid positive cue is that 30,000 crores of gross money that's coming in every month in systematic investment plans, right? So investors here in India have kept the faith, but that faith is getting tested as well. So what is your final word of advice, wisdom, or as I said, even if it's a reality check, what would you leave viewers with?
Surabhi, as we all know, equities are never a linear asset class. So to that extent, you're going to see volatility, you're going to see range-bound market, you're going to see a good market, bad market, all of that. So at this point of time, we are in a phase of consolidation. Historically, this has continued for about 1.5 years or so. We are almost there in terms of the time correction that we have seen. However, as we discussed, the earnings growth is still very, very slow in terms of improvement. Once we see better trends on earnings growth, I think market will start discounting a little bit into the future. For a long-term investor, I think still there is decent money to be made in equities. The earnings growth is going to be in the mid-teens. So even if you expect some compression in terms of valuations, you're going to get significantly ahead of inflation in terms of returns, expected returns. So one should stay put. Of course, this is not a market where you can be very aggressive and extend yourself. This is a market where you need to keep patience and look for long-term opportunities. And those who are coming through staggered investments, either through STPs or SIPs, I think they need not worry at all. The reason that they do SIPs and STPs is to manage that volatility or manage that sideways market, and that's what we are going through at this point of time. For a medium-term investor, I think still very, very decent inflation-adjusted returns are likely from Indian equities.
Okay. As we are all set to thank you, Harsha, let me tell you that we did Moneycontrol did an economist polled 20 economists, and of course, how can we let you go without asking you about the budget? I think Ishan is joining in. Can we have Ishan on the screen as well? In a bit, I think we'll have Ishan giving us the highlights of this very, very interesting Moneycontrol economist poll. There he is. He's our data man of Moneycontrol. So Ishan, before we get to the findings, and I know your poll, I think, is basically saying that fiscal consolidation will continue even if tax revenues are under pressure. I think that's a big headline. But before Ishan, takes it away, quick final take with Harsha. Harsha, budget expectations. What's your wish list for the finance minister?
Wish list, as always, will be for lower taxes, but I don't think that's going to happen this year, Surabhi. As we have seen a little bit of pressure in terms of nominal GDP growth and tax collections, I think there is going to be pressure on capital spend as well as any possible tax cuts. I don't think we should expect in the base case. We do expect fiscal consolidation to continue, maybe about 10 basis points of further consolidation. And also the government is likely to introduce probably one more indicator to kind of look at, which is debt to GDP. And there is likely to be a glide path in terms of how debt to GDP is going to get consolidated over a period of time. I think these are some important factors that most investors would look at. And yes, from that perspective, I think this budget is going to offer them some of those positives. However, purely from a capital spend perspective, if you are expecting nominal GDP growth to go at high single digits or low double digits, you cannot really expect more than 10-12% kind of capital spend given continuing fiscal consolidation. So I think that's where we need to be focusing on. And in terms of sectors which will get that kind of capital spend, I think more of the same. Some of the policy measures have come through over the years in a very, very consistent manner. Defense, infrastructure, railways, manufacturing, electronics. These are some of the areas which will continue to kind of see those capital spends going into.
Okay. All right, Harsha, great conversation as always. Thank you so much for joining in, and let's see, hopefully some of those expectations and those wishes come true, and the budget does give the market a much needed thrust, a much needed impetus. Thank you for joining us this morning. You have a fantastic day.
Thank you.
Thank you. All right, and with that, it's back to Ishan. Ishan, thank you for standing by for us patiently, but we are very, very eager and keen to know what exactly is this Economist survey saying? 20 people polled. What are the findings?
Hi, Surabhi. Thanks for inviting me on the show. So one of the things that you need to consider is we do this poll every year as the budget comes around. It's done a week before the budget comes in, right? And we poll about 20 economists from major leading banks and securities institutions and all. So what we found this time around is, as you said, the fiscal consolidation path is expected to continue. Harsha was saying 10 basis points. Economists are a bit more optimistic about this. They are expecting about 4.2% of the GDP compared with 4.4% that the government is expected to achieve for FY26. Now, on the growth front, there is a surprise from the economists. They are expecting growth to be 10.1%, not in high single digits or low single digits. So that might provide some reprieve from the economy. Gross market borrowings, a number that is often looked at by the markets, would be around 16.5 lakh crores, which is again 10% up, which basically indicates that a lot of your capex spending would be funded via the borrowings and not via expenditure compression, which is also visible in the size of the budget, which is 53 lakh crores, as you understand. Now, where Harsha was talking about on the capex front, there is some steady capex spend now. So we spent about 3.14% of the GDP on capex last year. This year around, it's 3.05, which is kind of a slight decline. But the major part is capex is expected to be at 12 lakh crore, as you can see on the chart on the screen. Another thing that is there is because the government is stacking debt to GDP now, and it has a target of 50% by FY31. There's going to be a significant reduction there. We are looking at a 55.2% of debt to GDP, which is at least 1% down from last year. But Surabhi, if you look at it, the main findings are not here. We asked a few other questions to the economists, which we ask usually. Last time around, when we asked the economists what is your primary concern for the economy, their main point was inflation, that inflation needs to come down. This year, Trump and global headwinds have become the top talking points amongst most economists. Out of most of the economists that we polled, about a third pointed to US and global headwinds as a priority concern or a primary concern for the economy. The next part, as Harsha was talking about, was private investment. Now, if you see, private investment has not picked up across sectors. It's not broad-based as of now. Certain sunrise sectors are seeing investment. Your renewables are there, semicon is there, a few other tech-related industries. But across the old industries, there's not so much of investment in that aspect.
The old industry,
The old economy is still not catching up with the new in that part. So that is one area that economists did raise that is a concern. Nominal GDP was also a concern, but more from a perspective of keeping this recovery on, because most of the economists were mentioning that the government has done most of the things till now, the income tax cuts and the GST cuts. But what has not happened till now is that you don't have much space for a more consumption boost if you want to give. And how do you give that? That was one of the questions for economists. We can see some measures on the trade facilitation part. About 94% of our economists were expecting something on trade facilitation, and about 90% were expecting a push for manufacturing as we go forward. So those were the broad findings. We have a few more questions to cover, but I'll get back to you on this one.
Okay, all right, Ishan, that's a great sneak peek. And those are some really fancy looking graphics. If you want to see them in greater detail, you know where to go. just log on to the website. You can go on moneycontrol.com. You can, of course, find it on the app as well. That's the MC Economist Survey, and it's live now. You have all the details. And Ishan, tomorrow you're coming back with the CEO survey, aren't you? That's the India Inc. survey.
Tomorrow we are launching the CEO survey, yes. And that has about a participation of close to 50 CEOs and CXOs. Right. And that's going to be very interesting to look at as to what they expect from the economy. You will get two sides of the things as to how economists are thinking and how your CEOs are thinking about the economy from a similar perspective.
Awesome. So you know where you have to be between 9:30 and 10 o'clock in the morning tomorrow, because we want the highlights of that survey as well. It'll be very interesting to see what the mood is in India Inc. as we get set for Budget 2026. Thank you so much, Ishan, for the highlights on this one.
Thanks a lot, Surabhi.
Thank you very much. Well, this conversation also sets us up very, very nicely for our second segment. And this one is called Going Beyond the Ticker. All right, so this is that time of the show where we go a little away from the tick-by-tick rates and we look at the bigger picture. And of course, the spotlight in Budget Week is, of course, on what else but the macroeconomy and the shape and form the economy is taking as we get set to hear the Finance Minister. We have with us Pranjal Bhandari of HSBC joining in. Pranjal, thank you so much. First time that we are speaking on Money Control with you on the digital airwaves. It's very nice of you to join us. Welcome to the show.
I'm delighted to be here. Thank you for having me.
So Pranjal, I spent some time over the weekend going through your pre-budget note as well. And I think, the market is at an interesting juncture. Everybody knows that there's no point expecting more tax cuts, but that's exactly what everyone wants. But you tell us, what do you think the big headline from this budget could be directionally in terms of policy, in terms of macros? What would you watch out for?
Okay, great. So I just want to take a minute to basically explain what I think the macro backdrop is. I think what we have seen in 2025 was growth which was driven by the informal sector. Farm production was very good, rains were very good, inflation came down, improved purchasing power, and consumption because of all of the tax cuts. So it was informal sector and consumption. But these things can't last you for another year because many things were one time. So in 2026, we need a pivot. We need to move from informal to formal as the main driver of growth and from consumption to investment as the main driver of growth. And I think that is where a confusion is happening. We're at crossroads. We are moving from the 2025 world to the 2026 world. And therefore, many indicators we see seem to suggest that things are looking good, like, for example, credit growth or real GDP growth. And many things, data we track, seem to suggest that the economy is not doing well. For example, the latest PMI prints or nominal GDP growth. I think the truth is we are in crossroads. And what the budget can really do is to make this pivot from consumption to investment a little more easier. What can it do? I think the first thing it can do is to basically show restraint in the budget, bring down the fiscal deficit because it has to lower its public debt. It's very high. It's promised it will. And that will give a lot of stability to the markets. The second thing it can do is within this consolidation path, focus a little more on capex. Last year was all about consumption, giving tax cuts. But this time, perhaps we should move a little bit more towards capex. The third thing I would say is going to be outside of the budget, which is the central bank. I think the central bank needs to remain quite accommodative in terms of liquidity. And the fourth thing I would say is just reforms. And here it's very interesting. I think there are two types of reforms. Hard reforms, like doing all these labor law reforms, deregulation, all the things we are thinking about, push them further. But I think we also need to think about soft reforms, policy certainty, not changing tax rules 10 years down the line suddenly. All of this certainty, I think that is very important for people to do long-term investment in the economy. So from that perspective, I think both central bank and government have a big role to play in the next couple of weeks.
Oh, absolutely, absolutely. So Pranjal, let's take this one by one. And let's start by looking at the state of the government's finances and whether it has any room to maneuver and really, provide any further stimulus or not. In your own expectations, I think you're also expecting the fiscal deficit for FY27 to come down to 4.2%, right? From 4.4 in this year in all probability, it comes down to 4.2. So this at a time when obviously tax revenues have been very difficult thanks to the GST cuts and the income tax cuts. Simply put, will the government really have enough money in the kitty for the new financial year to really go out and spur capex, to do anything meaningful on the capital expenditure front?
Look, there's never enough money for a large country like India, which has so many challenges. And probably for all our household budgets as well. But I think things are a little easier this year than last few years. Last few years, we've had to bring down our fiscal deficit by very large quantum, 0.4% of GDP, 0.6% of GDP. This time, the challenge is slightly manageable. It's 0.2% of GDP. And I think that gives us some headroom. I think that is one. The second is we are getting a lot of help from non-tax revenue. Last year, tax revenue disappointed us. It was 2 trillion lesser than budgeted. But out of that, half of the whole, 1 trillion, was actually filled by dividend from the RBI and PSUs. And I think these two will remain supportive in FY27 as well, the non-tax revenues. And the third thing that could be supportive, I think, is a possibility of cleanup in current expenditure. In the last 5 years after the pandemic, the number of centrally sponsored schemes has just doubled. And it happens every few years when there are a lot of elections happening, it happens. But then the government also takes a step back and consolidates. So if they do this whole consolidation in FY27, then you can save some money in current expenditure. So despite bringing down the fiscal deficit, my sense is there will be space to actually increase capex, more than it was increased in the last year. And I'm really hoping for that.
Okay, so perhaps, your number is about 12 lakh crores, right, for FY27 expected capex?
Yeah, I would say between 12 and 12.5 trillion.
Okay, so that could be the extent of, capital expenditure that is put out for the new financial year, FY27. Pranjal, in terms of reforms, and you mentioned that that's the other big area to watch out for. In specific, would it be anything significantly different from the past? I mean, we always hear of these, PLI schemes, specific focus on sectors like electronics, on MSMEs and on renewables. I mean, is there anything beyond this that you would specifically watch out for?
Yeah, look, PLI has been a mixed basket. In some sectors, it's been a success, like electronics. In some other sectors, it has not been as much as a success. Remember, there were 14 sectors in which PLI was announced. So, of course, they can keep changing the design, the framework a little bit on the edges and experimenting with that. There could be some of that, but I also think that there might be some more incentives for small firms who are trying to become bigger. So some incentives out there. But for me, the biggest reform which I'm most excited about is this whole rethink on external trade. For the first time in many years, over the last year, I think our government is really trying to open up India. We are going out there, we are signing trade deals. We've had UK, New Zealand, Oman. Today the announcement on EU-India trade deal is also expected. And I think this is a very big change in, our thinking. We're also being a little more open on FDI inflows. We're also mending a relationship, or at least being friendlier to some other countries. And we are trying to bring down our import tariffs. Even we were, putting very high import tariffs, both quantitative and non-quantitative. So my sense is that all of this is very important. And over time, it could increase India's engagement with the world. And that itself is the biggest reform India is doing. And then just marry that with what's happening domestically. We are deregulating, a lot of the old rules in the central and the state government. I know it's small because it's slow because it's very complex, but it's still that is being pushed as a priority. And then my final point is something which a lot of people don't talk about. Many of India's laggard states like UP, Bihar, in terms of GDP per capita, have been doing a lot of infrastructure push. Their governance is gradually improving. They are the ones who have the wage advantage. Their wages are much lower than even Vietnam. They are the ones who can actually start producing a lot more of these mid-tech goods and be a part of this exporting sort of dream that we have. So I would say a lot is happening. I don't think we will see the impact of this immediately. I think we'll have to wait for 2 to 3 years, but we need to keep pushing here. So, a lot of anxiety in the short run, but I do think we're in the right track for the medium term.
Pranjal, quick final question. You mentioned the external sector. Now, here, the weakness in the rupees has been telling, right? And a couple of different, perhaps, objectives that the government has. There are exporters who obviously are perhaps expecting some sort of help, especially exporters to the US, a lot of the apparel and textile exporters there. Do you think that can be worked out? If yes, in what format? And then, I mean, on the external sector, this relentless FPI selling itself is the biggest problem. So I don't know if on the tax front, the government would want to tinker with anything on capital gains, etc. But, how would you read between the lines between FPI selling, weakness in the rupee? The rupee, by the way, today has pulled back very nicely. So has the equity market. Equities are doing well. The rupee is doing well this morning. And the fact that exporters are still crying out for help.
Yeah, it's not been easy actually across all asset classes, equity, rates, and FX. India has underperformed the EM index over the last year. But I would think about it more constructively. I think what's happening in the currency is that the fears of both capital outflows and the fact that, we've had this punitive 50% tariff from the US, I think they both have really weighed on the rupee sentiments. What we've seen in January is a lot of FPI selling, importers hedging. I think all of that has also weighed on the currency. But I'm going to take a step back, and my sense is that these announcements like the India-EU trade deal are important because what we sell to US is pretty much the same amount and the same goods that we sell to EU. So what we were not able to sell to the US, we can perhaps redirect a little bit to EU. And these kind of sentiments can actually improve external balances and be positive for the currency. A lot of the weakness and depreciation has already happened. It's behind us 10 to 12% in real terms. So maybe a lot of the adjustment has happened with some good catalyst. We can think about a stronger rupee. And generally speaking, at the end of the day, our macro environment is pretty good. Deficit is coming down, current account deficit is small, inflation is low, macro stability is fine, growth is decent. I think, the tide can turn in 2026. Not just in the rupee, but across all asset classes. I feel constructive about 2026, perhaps towards the middle of the year. But I also want to take a step back and say that maybe we'll have a positive one-time adjustment across all asset classes, bonds, FX, and equities. For it to be a multi-cycle bull run, I think what we need is more reforms. So, this is where I will put, but I think for now, we can do well in 2026, better than we did in 2025.
Well, Pranjal, hearing you, we've definitely become more optimistic in the last 10, 15 odd minutes because you've put out the numbers out there and you're reminding us that the macroeconomy is actually not doing too bad. It's a question of perhaps a timing and things coming together. And hopefully, like you're saying, if we keep getting that reform impetus and a lot of the easing that we've seen, fiscal easing, monetary easing, all of those fruits start, coming together in 26, maybe we have a better second half. Fantastic conversation. Thank you so much for joining in, and we look forward to hearing from you, your wisdom, once the budget announcements are out, and then we'll dive into the fine print with you as well. For now, thank you so much and have a fantastic day.
Thank you for having me.
Thank you. Okay, by the way, before we move on to the last segment of our show, which is, the MC hot list, I just want to talk to people on our live chat. I just want to acknowledge the people who have been, speaking out to us. Hi, Nikhil. Thank you very much. Thank you for your kind words. Okay, SK Kumar is saying, please provide the Hindi version. Maybe Mr. Kumar, हम शायद हिंदी में भी आगे चल कर के बात करें. Hindi is the language that everybody universally understands. Anil Kumar is saying, welcome, Surabhi. Anil, thank you so much. Now, I just want to tell viewers that this is a new format. In the next couple of days after the budget, 10 o'clock is the time where you can really connect with us and where we will be answering all of your queries. Right now, it's still early days. So we're not doing it right now because the team is also preoccupied with the budget. But remember, 10 a.m. is when you can connect with Moneycontrol over the next couple of days. And we will have experts coming in and answering your questions. But I see lots of specific questions here. Anil Kumar is asking what's the view on fertilizer stocks. We have Naveen asking for a view on Union Bank. So I'm noting down all these queries. The viewers just telling you that. There's a question on Shriram Pistons, on Keynes Tech. We're noting down all these questions. We'll try and answer some of them in our closing show today. And of course, going forward 10 a.m., you will be hearing it live from the experts themselves. So yes, Samir Nayak, we are not going away from our queries segment. We'll be doing it full throttle at 10 o'clock, the budget onwards. But today, some of these questions we will definitely take up in our closing show. Okay, viewers, so thank you for your attention. Now, before we go, it's time for the MC Hot List. Okay, so what is the MC Hot List? It is the hottest thing on Money Control every morning that you should watch out for. Interesting stories that have a market bearing. They could be moving stocks, they could be moving policy, stuff that you need to know. And one of the stories that we've picked out for you today is on silver. Relentless rise in silver prices. The big question that our colleague Zoya is putting up is, can there be a rejig in duties on silver? So there you go. The story is already on the website. You can go out and read all the details. But here we have Zoya with us to give us a bit of a sneak peek, a bit of a curtain raiser on what she's been picking up, speaking to a lot of traders and experts out there. Zoya, welcome to the show. Silver, it's a hot commodity. What are you hearing?
Well, good morning, Surabhi, and thank you for having me on. So over the past couple of months, we've seen that silver has kind of extended its near parabolic rise, soaring to levels that, analysts and silver bulls could only dream of. Even today, we're seeing that the white metal has extended its gains. So as you and I are speaking right now, it's hit another fresh lifetime high of roughly 3.5 lakh per kg on the MCX today. So apart from the key drivers of the rally, which is obviously the immense geopolitical tension that we're seeing right now and the economic uncertainty at the current juncture, my sources tell me that one of the key reasons that we're specifically seeing domestic silver rally this much is that the bullion industry is penciling in a hike in customs duty for silver. So currently, if we look at what silver faces, it sees a 6% customs duty and then there's a 3% GST levied on top. But as demand for silver has picked up over the past year, India's import bill has climbed since silver is largely imported. So just to clarify for all of our viewers, all the silver ETFs that all the retail investors are purchasing, they have to be backed by the physical holding of the metal. So silver is largely imported. So to cap imports and moderate our import bill, market participants are now expecting that the finance minister is likely to raise duties in the upcoming union budget. So in December, silver imports had surged 80% month on month to about $760 million. For the April to December period, silver imports jumped nearly 130% to $7.8 billion, which is a record that India has never seen before. This is compared to $3.4 billion we saw during the same period last year. So even after the festive season, which is typically when silver imports peak, demand is likely to take a little bit of a breather, but we're not seeing that happen this time as demand is continuing relentlessly. However, during the sharp surge in silver prices, silver futures on the MCX, they've been quoting a very unsustainable premium as a result of this rumor. So on Jan 21st, something very interesting happened on the MCX. Silver futures were trading at a premium of 40,000 rupees compared to the spot price. So given this sharp premium, the All India Jewelers and Goldsmith Foundation, they penned a letter to the finance ministry and they requested that Nirmala Sitharaman, our finance minister, conduct a very thorough investigation into this matter because they believe that there is someone who has sparked this rumor. So I had a brief conversation with the spokesperson from the foundation, and they say that silver could be seeing a duty of 15%, which is a whopping 9 percentage point increase in customs. So this would definitely send silver prices skyrocketing.
So you're saying, Zoya, sorry, I'm just spelling it out very clearly. So what you're saying is that the duty on silver, the import duty, customs duty on silver could be increased by 9% to 15% in the budget. That's a possibility?
Yes, that is what some people are expecting in the market, yes. Quite a hike.
And,
so very significant.
And what potential impact could this possibly have if there is such a big hike?
So what they're saying is that this will lead to significant duty arbitrage, and the bigger concern is that it would lead to a very significant uptick in smuggling. So we saw in one of the previous budget that the finance minister had actually cut customs duty on bullion to 6%. As a result, smuggling came down. This was largely done in an attempt to curb smuggling. So if customs duties are hiked again, smuggling could soar. There could be significant duty arbitrage, and while the demand for silver would come down.
Okay, all right. So need to watch for this because this could be
Yes.
quite striking if indeed there's such a big duty
Yeah.
hike. But thank you, Zoya, for that. And of course,
You're welcome.
I urge everybody to go back and read through the story details on Money Control. You'll find, all the context there. Zoya, thanks for picking that one out, and we hope to see you more often
Thank
on the
you.
show as well. Thank you for joining in today. Thank you.
Thank you.
All right, well, viewers, now we're coming down to the final, leg of today's show. Let's quickly recap the market. The market's actually looking quite good as we're winding down this edition of Opening Bell. There was that very sharp dip, but that got bought into. So once again, we're seeing about an 80-point increase on the Nifty. It's been a bit of a volatile start. It's been a bit choppy. Let's put up the Nifty if we can. But it's looking better than where we were at 9:15. The mid-cap index is also up by about 0.4%. And the Bank Nifty is also higher. So there we go. That's the market for you. That's the dip that I'm talking about. Initial opening dip. It's been bought into, but it's a long day ahead. We need to see how this plays out. Again, some stocks to focus on. The biggest winners of the morning would be Axis Bank after positive numbers. Look at Adani Enterprises and Ports. These stocks had sold off very aggressively, almost 7, 8, 9, 10% down on Friday, because of worries about potential SEC summons coming in for top Adani leadership. So that was a lot of selling on Friday. This morning it's changing, and either the group kind of denied all of it. So Adani Enterprises up about 5%, Adani Ports is up about 4%, and that's the other stock that I was talking about, Axis Bank. It's the biggest winner, one of the biggest winners on the index, up about 5% as well. Tata Steel, UltraTech Cement, these are some of the other names on the upside. On the flip side, watch for Kotak Mahindra Bank. Kotak is down 4%, and Mahindra under pressure because of this India-EU FTA, which could be making European cars a lot more cheaper if they're imported into the country. So watch out for some of these names. Wipro is the other one, which is weak. Okay, so it's time for us to say goodbye. But as we do that, I want to leave you with the quote of the day, or you can call it sort of the market call of the day. It's a pretty interesting one. It's a view that's coming in from BlackRock. And this is BlackRock speaking to Money Control. Let's see if we can put the quote up. And they're actually sounding a little optimistic on the Indian market. That's Samara Cohen of BlackRock. She was in conversation with Mahalakshmi of Money Control, and she says, at a global level, we are neutral on emerging markets, but within that, we are overweight on India over a 5-year structural horizon. She goes on to say that 3 factors support their positive view on India. First, demographics and consumption potential. By 2030, she says India will represent about 20% of the global working age population. Second factor is India's digital readiness, where India ranks among the strongest globally. And the third factor why BlackRock is positive on India is India's relative geopolitical resilience. So there you go. 3 factors why BlackRock is still very positive on the Indian market from a medium-term 5-year perspective. On that optimistic note, we'll wind up this edition of Opening Bell. Thank you so much for being with us. We'll see you again around the closing time soon.